Welcome back. As promised, let's talk markets. Trideep Bhattacharya from Edelweiss Mutual Fund is now with us to discuss the market fundamentals. Trideep, you've been fairly positive on the markets the whole while. I mean, you've not held on to a lot of cash positioning as some of the mutual funds have. So what has been your approach now? So first, the fall in the first quarter of this calendar year, then this big snapback and recovery in April. What has your positioning been and what have you been doing?
Yeah. Hi. Hello. Thanks for having me on your show. I would say that all this while markets have been making a transition from an extreme macro uncertainty, which was there beginning of the year, where we had no clue about our own country's spending, about Trump's spending patterns, and also the geopolitical issues, to now where two of these major issues are kind of resolved. The only issue that is left unresolved is the earnings uncertainty, which we are kind of going through as we speak in the earnings season. And markets have been climbing this wall of worry over the last 2 or 3 months. And you're right. I mean, we haven't held cash, and hence, when the market caught a good bit of coming out of macro uncertainty, we caught that we were positioned in the right way. But we still think that the earnings part of the uncertainty is still not gone away. I think it will take probably a couple of quarters more to come back. But that's lesser of a worry than the big uncertainties that have been looming large on our markets, over the last few months.
Trideep, good morning. Thank you for joining in. So by when do you expect this earnings uncertainty to stabilize? And once that does so, or even in the current juncture when it has not stabilized, is there a pocket or are there pockets where you would look to deploy some of your funds? You've not held on to much of your cash. So where have you deployed those funds?
Yeah. So, overall, the context I would lay out is, since national elections last year, economic decision making in India actually suffered till about December last year. But Jan, Feb, March onwards this year, we have started to see economic decision making pick up. That has resulted in order flow announcements in various different sectors like defense, infrastructure, etc. Now, for this to translate into earnings, it will take a few more quarters before companies actually take action. So putting these together, and also if you look at the consumption softs that have been given in the budget, crude oil fell about 25%, which is a meaningful fillip, and also rate cut. My sense is as we get to the second half of fiscal year 26, we will get an earnings rebound starting to come through, particularly in the consumption side, where I think the ducks are lining up quite well. So, as you said, that the areas that we have been deploying money in the weakness that we have seen since the beginning of this year have been in areas like consumption, have been in areas like rate beneficiaries like NBFCs, where valuations are still reasonable. And third, select consumption areas like, for example, tires, where we think that along with rate cut beneficiaries, the input costs will also stand to kind of help them in good stead as we get towards the back half of this year.
We'll come to that. By the way, look at the way the markets are sliding. The mid-cap index is now down 1 1/3 percentage point. Commodity names are slipping. So you've got Nalco, SAIL, Hindustan Copper under severe pressure. PSU banks have been weak. Bank of Baroda, which reports its numbers, is down nearly 2.5%. But even a PNB bank is sliding right now. Stocks like Unicommerce eSolutions came out with numbers. Numbers look good. The stock was up 10%, but now it's up only close to about 5%. So there is pressure, which is visible. And across the board, the entire Adani complex is seeing profit booking after yesterday's big rally. So Total Gas down. You also have cuts coming through in Adani Green, Adani Ports, Adani Power, Adani Energy Solutions, across the board. 2 to 4% gone on that. Tell us a little bit more, Trideep, coming back to the stocks and the themes that you like. Tyre, you said that the commodity prices, the decline in commodity prices, or perhaps the input for tires could be benign, and that could be a driver for earnings growth for Tyre. In tires, which is the segment that you like in particular? Which one would you bet on?
Yeah. So tires as a sector has gone through a good round of consolidation over the last few years. They have become a little more capital disciplined, which they were not there about 4 or 5 years ago. So the sector health has improved. And on top of that, now we have a situation where capacity additions are a little limited, and particularly in two-wheeler, companies exposed to two-wheelers and replacement tires are the two areas that we are positive on. And we think that from a profitability standpoint, margin standpoint, things might be scraping around the bottom. Of course, there could be demand-related challenges if the global growth comes off and stuff like that. And hence, we like domestic tire companies which are exposed to domestic space, a higher replacement, segment, and also two-wheelers. These combination is, I think, a good combination to kind of look at a few select tire names within the space where things could turn out to be well over the next few quarters.
Now, what about the wires and cables space, Trideep? This has been in the news for the last couple of months. Ever since the news of Ultratech entering this field, it has suddenly sparked off a huge interest in this entire area for the likes of the incumbents. We saw one of these companies report results the day before. It had a very strong reaction to it yesterday. It's continuing from that in today's session. There are a couple of others reporting results today as well. Now, in the view of this rising competition, where do you position yourself within this building materials space, if you could put that wires and cables into it? And or are there better opportunities other than wires and cables just because there is this fear of competition intensifying?
Actually, we are long this space right now. We think that as an ancillary play to real estate, where real estate stocks and sector have done quite well, building materials and also wires and cable plays into industrials as a combination is a good place to be from a growth standpoint. Yes, the competition in this sector, like in few others, have actually increased. There are many other sectors like paints, cement, where high gross margins and reasonably decent margins are being challenged by high competition. That I think India Inc. will have to grapple with as listed companies. That's a separate challenge. But that said, the demand-related drivers in this segment continues to remain robust, which is what you saw in a couple of results that you've seen in the past, and I would say that you would see in future as well. That doesn't shy away from the competition-related concern, which will come in a couple of years' time. But what we need to understand is companies with strong positioning, with moat in the segment that they operate in, will continue to kind of get a fair share of the profit pie. Because in this segment, to get capacity, get the approvals in, and to operate takes itself about 2 to 3 years. So it's easier said than done.
Okay, it's the performance was fairly electrifying for RR Kabel at least, and the stock is still continuing to hold up. What about Mahindra and Mahindra? Is that a stock that you'll own in your portfolio? Because that continues to surpass estimates.
So in your question related to tires, as I said, one of the favorite segments within autos and auto ancillaries are basically two-wheelers and tractors. While I can't be stock specific, I think companies which are exposed to those two subsegments are areas that we are overweight with regards to OEMs and also wherever we can find exposure to in the case of ancillaries. And I think the numbers of some of the companies that they have reported so far bear that out. We continue to remain positive in that space.
Well, Trideep, there's this other almost consensus trade is the banks, private financials. Everybody has been saying there is value in private financials. There is value in private financials. Yes, there have been moves where HDFC Bank and ICICI Bank have hit record highs just recently. But in absolute terms, well, ICICI Bank may have outperformed, yes, but for HDFC Bank, the returns have been almost close to negligible, even if the stock is at a record high. What do you do in private financials? Do you stick to this proposition that, okay, fine, there is value, so I will stick to it? Or do you go looking for pockets where say, okay, fine, I'm getting returns, value or not, or value or no value?
So we are big proponents of looking at valuations, particularly for financials, because it operates between the liking space of FIIs as well as domestics. So around about late last year, there were extremely tight regulations. Valuations were on the lower side, and the previous quarter numbers were quite bad, relatively speaking, for financials, particularly the banks. And in that context, that's when we actually increased our weightage relative to financials in general, and have been able to kind of play this rally through with the right stock selection. At the moment, though, we think a good part of that rally is done. We think that low-hanging fruits with regards to low valuations, very tight macro conditions has given way to easy macro conditions and reasonable valuations. So from here on, stock-specific execution will be more dominant than valuation as a factor. And hence, we've actually, in the sectors that I mentioned, that's why I mentioned NBFCs relatively as a space where we still remain kind of overweight, because we think that rate cut beneficiaries with regards to their earnings is yet to play out. But I think a good bit of banking rally banks overall, particularly PSU banks and select private sector banks, are have done their bit over the last few months overall.
Thank you, Trideep, for joining us today. Need to get into a break. As we do that, some good news for our viewers, because India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. You can get instant access to all our breaking news stories, our articles, financial world updates at your fingertips. So download the CNBC TV18 app now from the Apple or the Google Play Store, or just scan that QR code on your screen.